Hey, we are live on Facebook. It's Joanne Musa, the Tax Lien Lady. Today is your tax lien investing tip for this morning. Is on bidding at the tax sale. Let me move this so you can see it. Is on bidding at the tax sale. So we are going to talk about bidding, whether you're bidding online or at a live tax sale. At a tax deed sale, it's pretty straightforward, and at redeemable deed sales, because you're just bidding on the price of the property. But it's a little bit different at tax lien sales because there are different things that can be bid. So I'll just write a few of them on here for you. And as you come on, let me know, say hello, let me know where you're from, and so that I know who I'm talking to today. And these tips, by the way, are live on Facebook, and the recordings are here on Facebook. So you could always come back and watch the recordings. And for those of you who are not on Facebook, you can watch the recordings on my YouTube channel at youtube.com/tax lien lady. All right, so let's talk about bidding procedures at the tax sale. Okay, the most common is bidding down the interest rate. Okay, so we've got bidding down the interest rate, bidding down interest. Okay, bidding down the interest rate. And another one is in states where they don't bid down the interest rate, they might bid premium. So they might bid up the price of the lien. So there's a couple of different ways they do that, and we'll talk about that too. So the next one is bidding premium. And if you have questions about any of these, come next Tuesday at 2 p.m. to Ask the Tax Lien Lady Live and ask me your questions. All right. So we've got bidding premium. And that would be bidding up the price of the lien, or it's called in the industry premium. Sometimes it's called overbid too. Okay. So bidding premium. And let me see if you can see that better there. Okay. And a third way that it's done, because there are some states that don't bid down the interest rate, they don't bid up the price of the lien. Instead, they will bid down something else. Okay, they will bid down percent ownership. Okay, let's see. I don't know if I can fit this whole word in, but we'll do that. Okay, so bid down percent ownership. So that's a third method. Now, there's also other methods, okay? There's a fourth method, and it's actually two different methods that I lumped together, either round robin or random selection. And the reason why some states do this round robin or random selection is because they realize that bidding down the percent ownership is not the greatest thing. So instead, they will do a round robin or random selection. I'll just write random there. Okay. All right, so you can also have combinations of these bidding procedures. Okay, so besides, so let me give you a couple of examples. So in New Jersey, for instance, and it's the only, hi, Nettie, good morning. New Jersey is the only state that does that, but in New Jersey, they will use these two methods. Okay, New Jersey will use both these methods. So first they will bid down the interest rate to zero, and then they will allow premium to be paid. There's a reason why they do that. I'm not going into that here because that could be a whole nother tip about bidding in New Jersey, okay? Now in Colorado, they use these two. They use bidding premium. They use this method, bidding premium, and they use round robin. Okay. and this is Colorado. And here's how they do it in Colorado. The smaller liens, they use a round robin process. And for most of those, you have to be there live. They will do those live. But the larger liens, they will bid premium. Okay. And every state treats the premium differently. All right. In Colorado, for instance, you don't get your premium back. In New Jersey, you do. Okay. But you don't get any interest on it. In Indiana, you get a penalty. It's not an interest rate. I believe it's a penalty on on everything that you bid. And I've been to a city in New York where you get interest on everything that you bid on the amount of premium and the lien amount. All right, so everybody handles it differently. So those are the basic bidding procedures. All right, so which bidding procedure is the best? Well, all of these methods have pros and cons. All right, so for instance, the cities in New York can have their own rules and do what they want, even though most of the counties they all sell deeds, but the cities in those counties can sell liens. And I've been to 2 of those city tax sales in a county that sells deeds, and you bid premium on both of them, and they're both done differently. In one city, it's a 12% interest rate per year, and you bid premium, and the premium is a separate bid from the amount of the lien. So it's a totally separate number. So if you're bidding, it's really important to know when you're bidding premium, does it include the certificate amount, or do you have to pay the premium that you bid plus the certificate amount? Well, in this sale, as in most sales in New Jersey, the premium is a separate amount, and you have to pay both the premium and the lien amount at the sale. Now, in this particular sale in New York, and again, this is a city in a county that sells deeds, but the cities can have their own rules. So in this particular city, you pay premium. You have to pay the premium at the sale. It's in addition to the lien amount, and you get 12%, and the redemption period is 2 years. Now, in another city in the same county in New York that sells liens instead of deeds, they have different rules. It's a 1-year redemption period. It's a higher interest rate. It's 15% per year, and it's a 1-year redemption period. And you don't pay the premium at the sale. You don't have to pay the premium that you bid. And you bid up the price of the lien, it's all one number. So for instance, let's say it's $1,000 lien and you bid $50,000 to get that. Well, you have to, you only pay at this sale, you don't pay the premium amount. And the premium amount includes the certificate amount. So you're only paying the $1,000 for the certificate, and you don't pay the other $49,000 unless you actually get the property. Now that sounds really good, doesn't it? Well, I will tell you that it's not. I don't really like this sale because so much is bid. Like over 70% of the market value is bid on these liens, because you don't have to pay it there. You don't have to pay it unless you actually get the property. And investors are thinking that they're not going to, 99% of liens redeem. So investors are thinking they're not going to get the property. They're going to get redeemed, and they're going to get their interest on all that money. But here's the problem. Sometimes the owner of the property can't pay that. And you might wind up with the property when so much money it has to be paid back. They don't have to pay the premium back because it's not been paid yet, right? But if you actually get to foreclose on it, then you have to pay it in order to get the deed. Okay, so it's really not a good idea. At least I've not been. I went to that tax sale once and I didn't go back again. So my favorite places are, I do like tax sales where you pay premium and where you get interest on all the premium that you pay. Okay. Because in Colorado, you don't even get your premium back. In New Jersey, you get your premium back if the lien is redeemed in 5 years, but you don't get any interest on the premium that you pay. But in states like Indiana, in some states, you do get the interest or penalty on everything that you bid. In Indiana, you do. And all the redeemable deed states, you do also. So that is your tax lien investing tip for today. And if you're interested in learning more about bidding at the tax sale, our next tax sale success mastermind is going to be all about bidding at the tax sale. And this will be, we're going to be doing that, I believe, the second week in November 10th. We don't have the sign up page ready yet, but keep your eye on your inbox if you're on my list, or be here next week when I will have that information ready and we will be giving out the registration link for the Tax Sale Success Masterclass. There will be a small fee for the masterclass if you're not a member of the Tax Lien Profits Accelerator, but members of the Tax Lien Profits Accelerators get to come for free. So stay tuned and be here tomorrow. We'll be talking more about bidding at the tax sale. All right. We'll be talking a little bit more about proxy bidding versus direct bidding if you're bidding online. And there's other things that we could talk about too, about bidding at the tax sale. So I will see you tomorrow morning, same time, 9:30 a.m. Eastern, 6:30 a.m. Pacific. So I know that's early in the morning for you West Coast people, but I hope to see you here tomorrow, bright and early tomorrow morning, and we'll talk more about bidding at the tax sale. Bye.